Good day, ladies and gentlemen, to the Sibanye-Stillwater corporate update on Commodity TV. The company continues to suffer from the low platinum and palladium prices. However, significant progress was made in the first half of 2024 to secure the company and its business activities and put it back on the right track. Operating cash flow was also optimized, further securing the balance sheet. As soon as there is a recovery in commodity prices, Sibanye-Stillwater will be at the forefront again. The financial position can still be described as solid, as the balance sheet leverage ratio of 1.43 net debt to adjusted EBITDA as per 30th June 2024 is well below the covenants, meeting the creditor requirements. The group balance sheet was proactively strengthened through a series of financial transactions in June 2024, which resulted in additional leverage of approximately 25 billion South African rand and significantly improved the liquidity and flexibility of the balance sheet. The actions taken have been decisive and are reflected in reduced costs and improved profitability across most of its operations in the first half of 2024 compared to the first half of 2023, with the full cost benefits from the recent restructuring in the South Africa region expected to be realized in the coming periods. Further restructuring of the US operations in light of lower PGM prices is underway, and the Palladium project is exploring the potential for sustainable repurposing of the Sandouville refinery through the production of active precursor material, the PGM called. The prolonged period of low commodity prices, with the notable exception of gold, and ongoing cost inflation have continued to squeeze margins and reduce earnings and cash flows in the global mining industry. The group's financial results for the first half 2024 reflect the low commodity price environment, with the group's year-on-year profitability lower primarily due to the significant decline in PGM prices. The group's adjusted EBITDA decreased by 53% to $355 million, with 94% of this decrease attributable to the South African PGM operations, which recorded a decrease in adjusted EBITDA of 7 billion rand, or 60% to 4.8 billion rand. Apart from the US PGM operations and the US PGM recycling operations, which were also impacted by lower PGM basket prices year on year, the financial performance of the other group operations improved year on year, with improved operating performance at the Sandouville refinery, reducing adjusted EBITDA losses, and the South African gold and Century Zinc operations benefiting from higher prices. The restructuring measures implemented at the PGM operations in the USA and South African region resulted in an improvement in group free cash flow of 797 million rand compared to the second half of 2023. The group reported a loss of $379 million after tax for the first half of 2024, compared to a profit of $427 million in the first half of 2023, including an impairment charge of $407 million for the US PGM operations due to the 5 to 8% lower consensus palladium prices used in the fair value calculation. As a result, a basic loss per share of 264 cents is reported for the first half, with headline earnings per share of 5 cents, compared to earnings per share of 264 cents and headline earnings of 208 cents for the first half of 2023. Also, net debt increased by $360 million with borrowings of 1.9 billion and cash equivalents of $844 million. The main reason for the increase in debt of 0.58 times at the end of H2 2023 was the decline in trailing 12 months adjusted EBITDA to $0.7 billion. We believe that the strategic measures taken to ensure operational sustainability and protect the balance sheet will ensure that the group comes through these difficult times well and will then benefit strongly from an improved pricing environment. Projects such as Calibre and Sandouville will be very positive for the company going forward. As permitting and financing of new mining projects becomes increasingly difficult and costly, future demand is expected to exceed the increase in new lithium supply required to support projected growth, leading to increasing deficits in the second half of this decade. With current low prices discouraging the development of new projects, production from the Calibre lithium project will then be able to be made available to the growing deficit market. Also important was the refinancing and increase of the rand revolving credit facility, which would have matured on 11th November 2024 from 5.5 billion rand to 6 billion rand, which is a strong signal of confidence and support from South African lenders. Added to this is a non-leveraged transaction in August 2024, which was a prepayment agreement for the delivery of 48,129 ounces gold in equal monthly tranches from October 2024 to November 2026. This secured the group a minimum of $100 million in non-debt funding while providing upside exposure to higher gold prices. The group is also at an advanced stage of securing $600 to $700 million of additional non-debt funding. That means potential prepayments and streams for chrome, gold and PGMs in the South African region. In addition to the balance sheet strengthening measures, the cost benefits from the operational restructuring undertaken since 2022 are starting to translate into improved financial and operating results for most of the group's businesses, maintaining cash flow in the current low price environment. This is in addition to ongoing cost benefits and capital savings. The PGM operations in South Africa delivered another solid performance, increasing production and generating positive free cash flow in the first half of 2024. Lower production due to the restructuring of loss-making shafts, of which 2 were closed and 2 were restructured, and lower production from Sibanye-Stillwater shaft due to the shaft hopper failure and Kroondal due to the illegal labor dispute was more than offset by the consolidation of an additional 50% of Kroondal production following the acquisition of Anglo American Platinum's 50% interest in November 2023, resulting in a 4% increase in production to 828,464 ounces, with AIC increasing by 9% year-on-year to $1,150 per 4E ounce. However, a 28% decrease in the average 4E PGM basket price resulted in a 60% decrease in adjusted EBITDA to $255 million. Free cash flow of $45 million reflects a strong recovery from negative adjusted free cash flow of $14 million in the first half of 2023. Further cost benefits from restructuring in the SR region are expected to accrue in the coming periods, which will further support cash flow. Gold production from the South African gold operations of 344,109 ounces was 17% lower than for the first half 2023, with AIC of $2,078 per ounce, 18% higher, mainly due to the cessation of production from Kloof 4 shaft during 2023, but with some costs still to be incurred during the first quarter 2024 due to the phased closure process. Adjusted EBITDA from the South African gold operations of $117 million was 7% lower than in the first half 2023, but 92% higher than in the second half of 2023, with the comparison heavily influenced by the closure of Kloof 4 shaft. Free cash flow improved by 1.2 billion rand compared to the second half of 2023. Sonderville refinery operating performance improved significantly due to improved circuit availability and production stability following the repair of the cathode units in the electro-winning circuit in mid-2023 and other improvements to the plant. Nickel production of 4,270 tons of nickel was 22% higher than the first half of 2023, with nickel equivalent operating costs decreasing by 37% to $23,684 per ton nickel, primarily due to lower raw material purchase costs, meaning lower nickel price, and lower reagent and overhead costs. As a result of these cost and volume improvements and inventory movement benefits in the first half of 2024, the adjusted EBITDA loss for the first half of 2024 of $15 million was 57% lower than in the first half of 2023. The restructuring, refocusing on lower production and costs at the US PGM operations in Q4 2023 resulted in a significantly improved performance in the first half this year compared to the first half last year. Mined 2E production was 16% higher than in the first half 2023 and 7% higher than in the second half of last year, with AIC down 23% year-on-year to $1,343 per 2E ounce, which is within guidance for 2024 and the best operational performance since the first half 2021. However, PGM prices remained under pressure during 2024, with the average 2E PGM basket price received for the first half 2024 being 30% lower than the prior year, resulting in adjusted EBITDA of negative $16 million compared to positive $53 million. Despite the positive production and cost results, the 2E PGM basket price in 2024 remains at a level approximately $300 to $400 per ounce below the average AIC for the first half 2024, and a reduction in unit costs to achieve profitability at current prices is not possible without increased capital investment in production growth. The required capital investment is not feasible at current PGM prices, and therefore further restructuring of the US PGM operations is required to reduce cash outflows while ensuring the sustainability of the Columbus autocatalyst recycling operation. The restructuring is likely to result in a reduction in sustainable 2E production from the US PGM operations of approximately 200,000 2E ounces compared to the 2024 forecast, resulting in a reduction in the workforce. This will be followed by a fundamental review of mine operations to reduce the AIC to approximately $1,000 per 2E ounce. That would help a lot. The actions taken have ensured that the group is well positioned not only to weather this period of low commodity prices, but also with improved optionality and leverage for a turn in the commodity price cycle, which will support ongoing value creation and strategic execution. We are very positive for Sibanye-Stillwater. You can also find all the information on our Commodity TV app in German and English, as well as everything about commodities. We look forward to a like, and more importantly, please subscribe to our TV channel. Please note the disclaimer. The share discussed is part of the SLC Mining Special Situation Certificate, and I'm a shareholder. Thanks for watching us, and bye-bye from Switzerland.